One, I think the commonalities, of course, which we were very clear about across the central banks. But I think the big topic of the panel that we all discussed was uncertainty, policy uncertainty, particularly in the United States, economic uncertainty generally, and how that's going to impact not only the US, but the global economy, and the implications for the central banks in the UK, the ECB, and in China. I think there were some differences of opinion, but that's good, because then we got to have a debate about that. And I do think there's a chance for some divergence. And it was clear, we got wonderful questions from the audience. It's clear that the divergence for the United States may be a little bigger than the other countries, but only time will tell whether that's the case or not. Well, first is a bit of a historical one, is how strong the US has been compared to Europe, the UK, and China for the last few years. And there were reasons for that I spoke about. And how much that piece is going to change, because very significant weakness in the United States, very significant increases in inflation are going to, A, be a difficult problem for the Federal Reserve to handle, but the globe is likely to have similar shocks, although somewhat smaller in size. And so the question is, will the inflation shock dominate, and particularly in the United States, and so the Federal Reserve has to raise rates while the rest of the world is holding still or easing some more? That could cause further divergence. If, on the other hand, growth is impacted more than inflation, then obviously all the central banks could be cutting again at the same time, and we go back to the opposite of decoupling, but the central banks all moving in the same direction. I thought one of the nicest questions at the end is do we really care about decoupling? And the truth is, central banks by statute have to take their local economy, inflation and growth, as the first priority. So of course decoupling, the concerns about decoupling are not going to stop them from doing what they want to do, or what they need to do to meet their statutory obligations. But the dynamics for the globe are different if central banks are moving in a different direction than if they're moving all in the same direction. So far, there are not indications of that. The fact that interest rates have risen and the dollar is going down have, frankly, as much to do with a certain amount of financial market hedging adjustments all around the globe, because everybody holds some dollar assets at least, and they tend to hedge that dollar exposure. And that has very much pushed the currency down as interest rates have gone up. But if it becomes a more persistent issue, where actually there are outflows of capital out of the United States, that there's hesitancies to purchase US Treasury securities, for example, because US deficits are likely to grow and the US debt is likely to grow, then that's a very different and quite serious financial stability concern. Thank you. This is a wonderful conference. I'm so pleased I was invited and the governor included me. I've enjoyed it very much.